Hello everybody. Today is June 5th, 2009. Sorry, had to look it up. I forgot the date. I knew it was Friday. Anyway, it was kind of a busy week. A very busy payroll day. It was whippy action at first, and that was one of the things I wanted to point out because on the thread that I post on at Forex Factory, I've had some questions about, the larger news events and putting maybe a straddle trade, a buy and sell on either side of the price right before the news comes out to trigger a buy or sell, to catch the direction of the news trade. And what I've learned, and also just from years of looking at charts and watching the news, you can see sometimes it has a whipsaw effect. Sometimes it will take a jump back, or forward, or spike in the opposite direction. And because everyone will have their stop set there, or they'll have orders set there ready to trigger, trying to be sneaky, and the market makers can see all those orders piled up on their screen. And sometimes they'll spike in the opposite direction right off the bat, just to take all those out before the initial move happens. So you got to be careful of that. And so, as an example, right here we have the pound dollar this morning. This is the 1 hour chart. Let me scale it down to the 30-minute because the announcement came half past the hour, so you can see the exact candle where it started. Price started here. It was good news for the dollar. A lot less jobs reportedly lost. It's hard for me to believe, but it was a lot more jobs reportedly lost, so which is, supposed to be good for the dollar because it's some good news for a change for the dollar. And you can see the price, the new candle started out here, spiked in the opposite direction. And all in here, you could just imagine people had open trades and had their stops in this area, and people straddling the price, which was here, putting in, having open sell orders, getting ready to execute if they were triggered. And so buy orders up here if it triggered in this direction. So the market makers aren't stupid. They'll go ahead and take all those out, take out the stops, and then continue their move down. And you can see that pretty clear move, made a nice little move down, and then just continued to move down the rest of the day because that just had a good effect on the dollar for the rest of the day. Also, we'll take a look at the euro. Euro did the same thing, did the spike up, and then reversed all the way back down. And it just made another nice run today. And just to confirm, we'll do the other major dollar cross here. The Swiss franc did the same thing, spiked down. Right, that's the 1 hour. Let me change it to half. Right here, spiked down, and then went back up in favor of the dollar. So that is one of the reasons why I recommend not using buy, stop, and limit orders and straddle news events, because when they're a bigger number, when there's a larger deviation from the forecasted amount or the forecasted numbers, those kind of moves can always happen. And like I said, the market makers aren't stupid. They know what they're doing. They go ahead and take all those orders out, and then they run with it. So then that was all I wanted to say about straddling news events.